Good morning, everyone. This is James coming from Dividend Stock Talk, where we talk about dividend stocks and investing in dividend stocks for our weekly and monthly cash flow. Today just so happens to be Friday, September 8th. It is 6:35 a.m. We're actually going to try doing this in the mornings rather than the evenings because, as you remember, if you've been watching a few, some strange reason I get tired and I yawn throughout the throughout the broadcast, and I can't figure out what that's all about because I'm not really tired, but yet the camera's on. It makes me tired, it makes me yawn. I don't know. Maybe I'm bored with life. I don't think so. I seem to be enjoying everything. Well, with that being said, let's get back to dividend stock talk. Like I said, we invest in dividend stocks using a bunch of different strategies for cash flow. And basically, that's plain and simple. So why do we use dividend stocks and dividend stocks only? Well, I'll tell you why. Absolute worst case scenario, the stock market goes down and everyone's panicking, and I own a bunch of stocks that are paying me a dividend every year and increasing their payments every year. Because I'm only one investing in those companies that consistently increase their dividend payments. Now, don't get me wrong, I don't want to collect the dividend payments. I want to collect the money from the increase of the price of the stock. Because what we've been finding is that certain stocks move up just before the EX date, just before they pay their dividend. And that's what I want to take advantage of. I want to take advantage of the stocks that move just before the EX date. Now, the EX date gets posted at the beginning of the year, or whenever the physical year is, not the calendar year, the physical year for the company. The company will come out, let's say, Tuesday or a Wednesday, or sometimes even on a Friday, on a date that makes no sense to you and me whatsoever. Let's say September 20th. It's the company's beginning of the company's year. It makes no sense whatsoever. But each and every company is different. Some of them run on calendar years, but most of them run on what's called a physical year. I say, all right, hey, I'm going to start a company today. Why today? Because today's a good day. Friday, September 8th. Why not Friday, September 8th? Better get started. Better, sooner than later. But anyway, a company will just start on a whim. So the physical year starts their calendar. So it's different for everyone. So when they announce the EX dates, sometimes every 90 days, a company will pay out their dividend. And today, no exception, there's a bunch of companies that have their dividend paying out today. And that's what we're going to take a look at. So that being said, let's jump on in and see what we have working. Not a yawn, but a sneeze. Delightful. All right, so we have Colgate-Palmolive. We don't know what it did yesterday because, believe it or not, I was busy all day yesterday. Didn't have a chance to log in at all. Okay, so Colgate-Palmolive starts the year off in the 71, 72 area. Flounders around a little bit for a couple of months, drops down, and finds a low, 65, and it trades there for a few months. It finds a low of the year at 63.54. From there, she jumps right back up to that 73 area and trades for a couple more months there. Drops down to 71, shoots up to 76, 77, and back down to the 71 area where she is today. Now, this part of the chart shows it dropping down and finding what looks like a new bottom right down here in the 70, 71 area. Now, we have Colgate at 74. But, hey, it is what it is. That being said, today, let's quickly take a look at our position. That way, give you an idea of what I'm looking at and why am I explaining it that way. Now, July 1st is when we got into Colgate-Palmolive. Now, every week since then, we've been selling covered calls. So we've been bringing in a nice little chunk of change every week off of Colgate until it fills. Now, today we got the stock price option price of 71.50. So that's kind of like the goal for it to hit. Okay, she's at 71.56 right now. So if this thing stays where it is today, we will be called out. We will make a little bit of a profit off of that, but in the long run, we might just end up breaking even with Colgate-Palmolive. It happens. We buy it at 74, we're selling it at 71.5, but we collected a whole bunch of premiums from the covered calls, and we also collect a nice chunk of change from the dividends. Okay, that being said, here we got 71.56. Now, what else did we take a look at today that we might want to take a quick gander at? Come on. No, that seems to be going slowly. I don't know why that is. It's too early in the morning to be congested. Wait for the program to respond. That's always lovely. That one's not opening either. Well, ladies and gentlemen, it would appear that the computer is a little faulty this morning. So while we're waiting for the computer to catch up doing what it's doing, let's see what else we can do. Alright, so that's not helping me at all. Jump on over to here. There we go. That one's not working either. Oh, wrong one. Okay, let's go back up to the market watch. And here we go. Okay. Today being the 9th of September, the 8th of September, Friday. Let's see who we're looking at for today. Ooh, who's going EX today? Let's check that out. FDX. Who is FDX? FDX. Federal Express. Gotta love Federal Express. Except Federal Express starts the year off right around 163, drops down to 158, which seems to be the low for the year. From there, she jumps up to a trading range of 173, travels about a month and a half up there, then shoots on up to 193 area, and ends up trading there for 1, 2, 3, 4, 5 and a half, almost 6 months. Jumps up to 209 area, and she trades there for the rest of the year, which is where she is today. Now, it's going EX today, so which means you want to be out of this one by the end of business today. So that's the 8th, and 10 days prior to today was, the first was 5 days, the 25th. So we're looking to get in this one on the 24th. So let's see what happened from this thing from the 24th. All right, she opens up with the 24th at 208. Here's the opening price, the high and the low, and the close. So the opening price for this one 10 days prior to today was 208 and 2 cents. Okay, had you jumped into this one, you would have been holding on to it for for the day, and then that very next day it jumps up to 209. That you'd definitely be out on several of the strategies that we use here. Now, would you hold it and continue to hold it through the X date? Now remember, this is yesterday right here. She closed at 213 yesterday. And today is the last day the stock's going to trade before they pay out the dividend. So today is the day you'd want to be out of this one before the market closes today. or actually you would have wanted to bet out of this one yesterday, which is way above from where you got in. If you got in 10 days ago, that would have been 208, and now she's at high at 214. That's $6, which is a nice move, which is a heck of a lot more than what the dividend was offering. So had you bought this and jumped in with the expectation of using the trailing stop, you may have been able to collect all, 5 or 6. Look at the high here. High is 216. That's $8 increase. So had you jumped in at the opening of the day, 10 days prior to the exit, which today, 10 days ago, would have been the 24th. Granted, the stock did drop lower. She opened up at 208, see, 208.02, and the low of the day was 205. Had you still been into it, held on to it, that 205 would have risen all the way up to a high of 216. Okay, nice little chunk. Then she dropped back, which from here, your drop back would have kicked in your trailing stop more than likely. Or you could have got trailing stop kicked out here because you had a high of 211.63, but then your low dropped down to 207. So more than likely, you would have been stopped out, because depending on how far you set your stop loss at. So it's 6:45 now, my friends, and I really can't hang out for the day. But let's do just one more real quick. KSU is factory shares. 36 cents. That's FSU. No, silly duck. KSU. It's Kansas City Southern.com. I have no idea what they do. All right, so KSU is offering 36 cents. Now remember that the date to get into this one was the 24th, because that was 10 days ago. All right, so she starts off the year at 95, trades in the 90, between the 90 and 95 area for about 2.5 months. Then makes a low of the year a couple weeks later at 79. Jumps back up to a trading range of 85, 86, travels that way for about 6 or 7 months, and she shoots up, and she settles in at 103 area. And she trades about 3 months into 103 area, which is where she is now, and during that time she makes a high of 109. So this is where we are at 103.99, and we were looking at the 24th to jump in. Okay, so here's the 24th here. Now looking for 36 cents. Okay, so she opens up at 106 even, and the high of the day was 106.27. So no, you would not have made it on that one, and if you continue to hold it, you'd still be holding it. Okay, but quickly look at the seasonality. See what that says. Now, let's see what it looked like 2 weeks ago, because 2 weeks ago is when we would have gotten in. Here's where we are now. 2 weeks ago is right here, at the 24th. Yeah. All right, I could say no, we wouldn't have gotten in, but most likely we would have, because getting into low right here, what's it going to do for the next couple of days? It's going to go up, it's going to go sideways, but continuing to move up. So yeah, we would have gotten this one in. Yeah, we would have lost money. But what's she going to continue to do? Well, this is where we are now, right here. She's going to go sideways and up before she hits a low. So holding on to this one into the date of record, which is the 11th, which is what, Monday, and then selling it sometime next week. That could very well be a possibility, because you'll be able to collect the dividend and collect the dividend and sell for profit. See, look at that. I just yawned. It's 6 o'clock in the morning, and no, I can't possibly be tired. I could be, but anyway. That being said, we missed the 36 cents for KSU. However, if you held on to it a couple more days, who knows where it would have gone. Let's go back to where we jumped in on the 24th. Yeah, the 24th, the opening price was 106. Okay, could she continue to go past 106? Sure, why not? You know, let's see where she is. Okay, so she's in the trading range of 103, 104. She had a high of the year at 109. So there's plenty of space for it to be in territory that's already been. So it's not looking to create new highs. It's just looking to stay within this little trading range. And you never know. She may do that by the end of the day. All right. This is James. I'm going to check out now because I'm going to get to work. I do have another job. All right. That being said, let's see if we have any questions. No questions. All right. So I did have one question that was emailed to me. Somebody asked, how much does it take to get started? Now, it really depends on what it is you're trying to do. This is not an investment strategy to replace any income unless you have enough money to do that. And that's only you can figure out how much money you need to replace the income you have. All right, our goal here is to receive anywhere between 0.5% to 2% per week. Right now we're averaging a little over 1% per week. Great, if I could live off 1% of my investments, that wouldn't have to work. But how much is it going to take for me to replace my income using just my investments at 1% a week? 1% a week comes to 52% per year, which is not bad. And you do anything over 1%, it's going to be more than 52% per year. But if that's what our goal is, if that's what your goal is, 1% per week, then you have to figure out what number it is that you want to start with. You want to start out with 500, 5,000, 500,000. That's totally up to you. This is not a get-rich-quick scheme or get-rich-quick program. This is a way to take the money you have saved up for your retirement and just give it a little boost. Are you taking money out to spend it and do other things? I don't know. I don't know what you're doing. This is for people who basically want to increase their holdings safely, but don't mind if you get stuck with I don't say stuck, but if you get, for lack of better words, stuck with a stock. Now KSU, if I was going to invest in this, and I would suggest you do the same thing, do the research on the company. Is the company, and it's really not that hard. You click on here, and it gives you the information of what the company is and what they're doing. Right click, a whole bunch drops up. More information on KSU, that pops up. And you get to the fundamentals. You can do the think back. Now think back is an interesting perk that Thinkorswim has. It allows you to go back in time to say, hey, wait a minute, if I bought this thing, let's say 3 years ago, what would have happened? It allows you to go back and look at historical numbers and use that to do your testing. Now you got company news, profit, TOS charts, analyze. You have a whole bunch of information that you can use before you buy anything. If KSU is not looking promising for you, I mean, I've never heard of them. I don't know what they do. I'm strictly a numbers person. If the numbers look good, the charts look good, if the software says yes, then that's what I want to do. And then if I'm holding it for a long period of time, fine. I mean, what has it done in the last 5 to 10 years? I mean, 10 years ago, had I bought it, was it in the 200s and 300s? Or was it down in the 20s, 30s, and 50s? I don't know. Those are information. That's information I want to know before I buy into it. So the question, again, was how much is it going to take to get started? And that is totally up to you. I mean, is this some place where you want to put your retirement investment? Hey, this is where my money's going to be. You know, if you don't put it here, where are you going to put it? In the bank? Sure, fine, put it in the bank. What do you think they're going to do with it? They're going to put it into the stock market, but they do it under different circumstances because they have to have a certain amount of money in reserve in order to start investing your money. Give it to someone else, what are they going to do with it? Now, I didn't mean give it to someone else. They give control of it to like a financial advisor, or you know, E.F. Hutton, or J.C. Whitney. There's a whole bunch of companies out there that actually do financial advising or investment services. They're going to do the exact same thing. They're going to put it into a stock market, and they're going to choose where it goes, and they choose what kind of returns you get. At least this way, what I'm doing is I'm enlightening you on the different trading strategies there are to increase your dividends or to increase your return on your investment. Now, I'm doing this as if it was my retirement account, you know, but I do live off of this. So if I'm investing X amount and I'm looking to get 1% of that, great. That's my goal. My goal is 1 to 2% per week, and I'm hitting 1%. So that's pretty good. So actually, I'm over 1% per week this year because we're up to 53% return as of today, and we still got the rest of this month, which would finish off the third quarter. And then we got the fourth quarter, so we're going to do well over 1% per week. All right, that being said, the answer to your question, how much does it take to get started? Actually, it doesn't take anything to get started. My suggestion is jump in and get comfortable with what's happening. Get comfortable with learning the terminology. Get comfortable with, pointing and clicking and dragging the mouse and making trades and analyzing stuff, and just get started. It doesn't matter what you do, but getting started and moving forward one at a time. But I do have to reiterate, before you actually trade any real money, know what it is you're doing. Thinkorswim has a really great simulated trading platform. It's making trades that using real numbers, but not using real dollars. So the simulation will give you an idea of how it's supposed to work. I'll give you, a perfect example, MOS. Right there, right click on that, more on MOS, more information, right there, fundamentals. There you go. And look at this, right here. It gives me all the information on the company, and guess what? If I like it, click that, click the buy button, and boom, it shows up right there. Am I willing to buy it at 20 bucks at MOS? What's happening with MOS? What is going on, and why should I think about buying it? All the information is there. Making a buy or a sell decision is just a click away. But using the simulation will give you the ability to get comfortable with the trades. But make sure when you make the trade, if I'm buying this at $20.49, that I want to know where my exit strategy is. Okay? Where is my profit? How do I want to get out? When do I want to get out? That being said, take the punch, jump in, and just start making the trades. Either use your real trading with the real dollars, or use the simulations. That way give you a better grip on what's going on and how to use it. Okay. Again, let me say it again. This is not a get-rich-quick scheme. This is investing for long term, okay? But you're using short-term strategies to increase more rapidly, okay? If you bought MOS and MOS drops to like 15 and you're stuck holding it and you bought it at 20, great, fine. Collect the dividend. The dividend is going to wait a second. Hypothetically speaking, the dividend should increase every year, giving you more and more money. Okay? That alone should be good enough for you. If it's not good enough for you, don't invest in that company. Find a company where everything matches and you don't mind holding it for a long period of time. Once you make that decision, great. Now let's make a profit on it and jump into another company. Okay? Great. MOS is at $20.49. I want to collect the 15 or 20 cent dividend. Collect that. Boom. I'm out. Let me jump to someone else. Let's who someone else is. Someone else could be CBS. Right there. The CBS Corporation. They get 18 cents. Same thing. Get in, collect a profit, get out. If you have to hold it, Great, hold it, collect the dividend. So how much does it take to get started? Doesn't take anything. Just get started. But make sure when you make the trade, there's enough profit coming in to handle all your costs. You know, the commissions, taxes, and make sure there's a profit there. If there's no profit, don't do it. Buy it, hold on to it. Anyway, this is James. I'm signing out from Dividend Stock Talk, where we talk about dividend stocks for monthly, weekly cash flow. You guys have a great day, and I'll talk to you another day.